Hello, everybody. This is Sunko, the Korean bro. Today is 2022, May 2nd. Mm. Let's read our articles of stock market tonight. Mm. What do we have? Let's see. These days, the issues we have is like this: geopolitical tension because of war between Ukraine and Russia, and recently, mm, federal government raised uh, interest rates, and because of COVID-19 in China, supply chain is disrupted. Because of those factors, the economy currently is not going in a way that I want. Uh, what's worse, it's gonna get worse. Uh, a lot of experts expect that economy will get worse. Uh, they don't think it's gonna get better. So to sum up, mm, uh, most likely stock market will have a downward trend uh, in the near future. But some would look at it as an opportunity, and some others would look at it as an if not sell now, uh, you die. Like that kind of a situation. Some people would think like that, but I would want to think of it as an opportunity. Mm. So let's see. First, we got another downward trend tonight. Market Libre is down by 6%. Uh, mm. So like I'm like I got extra money in my account, but I'm not investing into those good ones yet because the economy is not so good right now. If I uh, just hmm, hold it and hold it longer, and when chances come, then that's the moment when I take action. So I'm gonna just wait for it, that moment to come. Hmm. What do we have tonight? Stock futures fall, adding to April losses. Buffett reminds the world about three investing tips. Morning brief. Goldman goes different direction than Buffett on oil. Bargain shopping three strong buy stocks are flirting with a bottom. Tesla investors beware April deliveries for Neo, Lee, and Xpeng hit by COVID. Mm. Warren Buffett reminds the world about three legendary investing tips. Morning brief. Wall Street is so terrified. Stocks might be ready to rise. Okay. Is Cisco stock a buy or sell? Enterprise, cloud computing, telecom markets key. Cybersecurity stocks to buy and watch as earnings reports roll in. Activision stock rises as Warren Buffett scoops up more shares. Artificial intelligence stocks to buy and watch. Fintech stocks to buy and watch. The Dow is wavering. Is Salesforce stock a buy or sell as software growth stocks struggle? Activision stock jumps as Warren Buffett reveals $5.6 billion stake ahead of Microsoft takeover. Rivian's IPO lockup is almost over. Here's what that means for its stock. Dow Jones futures fall after stock market sell-off. Wall Street eyed lower open as growth stocks come under fresh pressure. Stocks and bonds are both down because of the Fed. Here's where to play defense. Amazon stock slides extending historic slump. MGM Resorts seek to buy Leo Vegas international push. Amazon shares down 1.5% pre-market after Webbush removes stock from best ideas list. Global Payments raises expectations for operating margins in 2022. Four takeaways from the Berkshire Hathaway annual shareholders meeting. Stock market news live updates. Stored VC says investors are unlearning the lessons of the last bull market. April was a brutal month for stock. Here are three charts that lay out the carnage, and one that should give investors hope. Spirit Airlines turns down JetBlue's offer. It will stick with Frontier's bid. The Fed wants to cool the U.S. housing market. U.S. stock futures turned lower after worst month for equities since the last recession. Apple, Nike, and six other companies with big exposure to China. Bearish bets. Three big name stocks you should think about shorting this week. Buy this used car dealer stock. It could rise 65%. Berkshire loves its oil stocks, but Goldman thinks another one is a better buy. Buffett lures fans to Omaha with stock buys, inflation talk. 5G stocks to buy, how next-gen cloud will create new services. Chip maker onsemi smashes first quarter targets, guides higher. Is Zoom stock a buy or sell amid noxious volatility? Retailers are having a tough year. Focus on what's ahead. Okay, there it goes. First ones. Warren Buffett reminds the world about three legendary investing tips. Morning brief. If I had to grade this weekend's Woodstock of capitalism, aka the Berkshire Hathaway annual meeting, I would slap it with a solid B. Was this Buffett's most headline-grabbing annual meeting? I have listened to watched enough of these spectacles in the past decade to say emphatically, no, personally, I liked his annual meeting in the middle of the COVID-19 pandemic as he sought to rally the world. Sure, Buffett rallied against Wall Street. He hates paying fees to bankers as seen once more in the Allegheny deal by saying it's a gambling parlor and Bitcoin for it, offering nothing of value. He scared the hell out of everyone on potential nuclear war. Charlie Munger flipped the bird to Robin Hood. But all of this felt very stale to me. Just vintage Buffett and Munger. I would compare it to comedian Andrew Dice Clay going to his bag of nursery rhyme jokes to please longtime fans. They're proven winning lines. So from headline standpoint, I gave the annual meeting solid C. Where Buffett earned his A grade, however, was in the investing wisdom he imparted on the crowd. Nothing new per se, rather great reminders one day after the Dow Jones Industrial tanked 900 points and Nasdaq Composite fell 4%. Do your research. Here are three lessons Buffett served up. Buffett's explanations on how he upped his stake in Occidental Petroleum to 14% of the company underscore the need to do your own research and make it extensive if possible. Buffett saw 60% of the top holders in Occidental being no more than passive investors unlikely to take advantage of a dislocation in the stock price. So Buffett saw that passiveness and a dislocation in the stock price and went to work buying up everyone else's shares, not in that 60% group savvy. Do your research, okay? Buy when others are fearful. Falling markets haven't deterred Buffett. In fact, this is the perfect environment for him. And it could be for you as well, provided you can have a time horizon of more than one day. Buffett spent $51 billion to buy stocks in the first quarter, notably HP, Chevron, and the aforementioned Occidental. Uh, Ask yourself this question this morning. What would Warren Buffett be doing after Friday's big down day in the markets? The answer is probably not preparing for a stock market crash because a free newsletter is warning of one. No, Buffett is probably licking his chops. His names is watching have just gotten cheaper. Buy when others are fearful. Okay. Buy stock of company you understand. Buffett mentioned he doesn't know how to use email and has documents printed out for him. With that context, is it any surprise Buffett became the largest shareholder in printer maker HP in the first quarter? Nope. Meanwhile, Buffett has a unique view of demand for fossil fuels by way of his ownership of railroad Burlington Northern. Is it any shock he's been pouring billions into Chevron and Oxycontin? Nope. Bottom line is Buffett has long purchased stocks of companies he understands. It's a wise course of action for you as well. If you don't understand what that $2 buy a tech stock you just bought really does, why are you buying it? So buy what you understand. You know, buy what you understand. Oh, buy when others are fearful. Buy when others are fearful. Do your research. Buy when others are fearful. Buy what you understand. Hmm. Odds and ends. And blah blah blah. Okay. Bargain shopping tree strong by the stocks are flirting with a bottom. Marathon Digital Holdings. The first beaten down stock we're looking at is Marathon Digital Holdings, at one of the U.S.'s biggest Bitcoin miners. The company operates a data center in Hardin, Montana, with a maximum power capacity of 105 megawatts. That said, aiming to become 100% carbon neutral by the end of 2022. The company has pledged to move out of the coal powered facility by quarter three. At a co-hosted facility in North Dakota, Marathon also owns 2060 top-of-the-line ASIC Bitcoin miners. Hmm. The company has set its sight on expansion. By mid-2022, Marathon is on schedule to install a total of 133,000 miners. And Bitcoin miners grow scrollingly. Let's move from crypto mining to a tech healthcare company which offers a unique proposition in the biotech drug discovery industry, which I do not understand. Indie Semiconductor. Let's switch gears again and hop over to an entirely different sector. As the name implies, Indie Semiconductor is a chip maker, although one with a special focus on the auto industry. The company's products are geared toward ADAS, Advanced Driver Assistance Systems, and connected cars, with Indie providing user experience solutions, lidar sensors, and vehicle electrification offerings. Auto production has been severely hit by supply shortages over the past year. But as an indication of the healthy demand for its products, the company has been posting some impressive growth. Tesla investors beware April deliveries for Neo, Lee, and X being hit by COVID. Hmm. Wall Street is so terrified, stocks might be ready to rise. paraphrase Monty Python, the stock market isn't dead quite yet. Sure, it feels like the S&P 500 has nowhere to go but down. Hmm. Hmm. Is Cisco stock a buy? Cisco stock about or sell enterprise cloud computing telecom markets key. Shares in Cisco Systems posted a good run in 2021 amid the market's rotation to value. Stocks tied to the U.S. economy reopening. Amid rising interest rates and supply chain issues, Cisco stock has pulled back this year. Hmm. The outlook for Cisco stock depends on spending trends for cloud computing infrastructure as well as corporate and telecom networks. Earnings for Cisco stock are due May 18. Cisco stock jumped 41% in 2021 amid volatility in the tech-heavy Nasdaq. Cisco stock has retreated 22% in 2022. Cisco's January quarter earnings topped estimates amid component shortages and supply chain issues. During the period, Cisco's second fiscal quarter products orders increased 33% year over year. And what else? Mm. Cisco continues to hike prices amid supply chain issues. Cisco is doing well. Cisco's challenge is capitalizing on strong product demand amid supply chain issues, said a CFR report. Outlook raised. Cisco stock shift to software services. Okay. At an analyst day, September 15, management updated guidance for Cisco stock. Hmm. The tech icon aims to increase recurring revenue from subscription-based software and services and shift away from its core business of selling network switches and routers. Cisco said it expects subscription revenue to account for 50% of total revenue in fiscal 2025, up from 44% in fiscal 2021. Using the just completed fiscal 2021 as a base year, Cisco said they expect 5% to 7% sales growth through fiscal 2025. The forecast includes acquisitions. In addition, Cisco management outlined how its total addressable market will reach $400 billion by 2025, up from the current $260 billion. Okay, during the coronavirus pandemic, corporate spending on data networks slowed amid increased office vacancy rates. One view is that corporate networks will be less important if remote work becomes entrenched. As a result, Cisco stock needs to high investment in next generation enterprise networks. The company aims to help corporate customers build hybrid network architecture that utilize on-premise data centers and cloud computing infrastructure. Acquisitions to software services. So is it a buy now? In a bullish move, Cisco stocks late last year broke out from a double bottom base. Okay. Technical perspective. Cybersecurity stocks to buy. What do we have tonight? Acquisition continue. Look for updated guidance as earnings reports roll in. Heading into April-May earnings reports, Morgan Stanley analyst Hamza Fodawala said typically slower quarter for seasonality and currency headwinds may result in more limited raises to 2022 outlooks. Okay. Checkpoint Software Technologies reported quarter first billing of $502 million, below consensus estimate of $532 million. Fortinet, Qualys, let's see. Okay, we got this one. And what else do we have? We got Fortinet. Checkpoint Software Technologies. We got SailPoint Technology Holdings, Alphabet, Palo Alto Networks. Network vulnerability cloud lift stocks. Another boost could come from Congress. The significant cyber bill requiring swift disclosure of all hacks and ransom payments was included in the 2022 Omnibus Spending Bill. Cybersecurity stocks with high composite ratings. These are the 5 best stocks to buy and watch now. Okay, what is it? Apple, Merck, General Dynamics, Synergy Energy, Marriott International, Merck. No surprise, artificial intelligence stocks to buy and watch. AI software market booms. Alphabet, Nvidia, Intel, Nvidia stock AI software development is building an AI ecosystem that is emerging as a de facto standard, said Jefferies analyst Mark Liffiset in a report. AI is not a killer app as much as a killer app incubator, said Credit Suisse analyst John Pizza, who follows Nvidia stock. In a report, Intel, meanwhile, aims to catch up in AI development tools. Venture capitalist Mark Anderson once observed how software is eating the world by remaking industries through automation. In the same way, artificial intelligence is expected to modernize software. AI and low-code, no-code tools are transforming software development, said the RBC Capital report in November. These efficiency allow for rapid development, with applications going from ideation to production in record time. Artificial intelligence stocks, IBM sells, Western Health. Okay. Fintech stocks to buy. Apple, Amazon.com, PayPal Holdings, Block. Apple Payments expansion looms. Fintech stocks, PayPal drops off IBD leaderboard. More fintech companies go public. The Salesforce stock a buy. Rivian. IPO lockup is almost over. Here's what that means for a stock. Rivian automotive investors have been dealing with a lot lately. Something else is coming down the pike. The initial public offering lockup ends in early May, potentially putting millions of shares on the market. That sounds scary, but it might turn out better than investors expect. Rivian sold shares to public in its initial public offering at a price of $78 a share on November 9. An IPO lockup, which bars some early investors from selling stock for a period, ends on May 9. Wall Street eyes lower open as growth stocks come under fresh pressure. Wall Street eyes lower open as growth stocks come under fresh pressure. U.S. stocks were set for a lower open on Monday as growth stocks came under pressure again, with investors focused on the Federal Reserve meeting this week, where policymakers uh, are widely expected to raise interest rates. Okay, investors focused on the Federal Reserve meeting. Mega cap growth stocks slipped in pre-market trading, with electric car maker Tesla Inc. down 1.6%, Amazon.com fell 1.8%, set to extend sharp decline from last week. Apple slid 1.7% as the iPhone maker faced a possible hefty fine after EU antitrust regulators charged it with restricting rivals' access to its technology used for mobile wallets. Mm. Disappointing earnings forecasts from tech behemoths Amazon and Apple, as well hot inflation data spooked investors on Friday, pushing Wall Street to log its deepest daily losses since 2020. Fed policymakers look set to deliver a series of aggressive interest rate hikes, at least until the summer. Hmm. Everyone knows the rate hike is coming. What people are a little bit unsettled about is what is the guidance going to look like from Powell? Is the next meeting going to be 50 basis points again, or is it going to go up to 75 basis points? Chairman at Gray Hill Capital in New York said the S&P 500 has fallen 13.3% so far in 2022, its steepest four-month decline to start any year since 1939. Four takeaways from the Berkshire Hathaway annual shareholders meeting. Big exposure to China. U.S. companies rely on China as a major market for their goods, a source of production, or both. That makes them vulnerable to China's economic malaise, harsh COVID-19 lockdown, and a broader reassessment of China-dependent supply chains. Global companies have invested for decades in China, building ecosystems for production businesses to cater to China's growing middle class. But now those investments are coming up against a changing world order as China has emerged as a strategic and geopolitical rival. Hmm. Three big name stocks you should think about shorting this week. So what are those three? Starbucks. Hmm. Okay, there you go. Buy this used car dealer stock. It could rise 65%. Good luck finding a bargain on a used car, but you can get one in the stock of used car dealer Lithia Motors. This year has been a bad one for auto stocks. And auto retailer Lithia is no exception. Low production has driven up prices for new and used vehicles, but also limited sales because there have been too few cars to sell. Now, the worry is that car prices have peaked along with profit margins for car dealers, while a potential economic slowdown could mean car sales won't be bouncing back. Hmm. Lithia. Lithia Motors. Are you a value investor? This one stock could be the perfect pick. Okay, let's read this one. For new and old investors taking full advantage of the stock market and investing with confidence are common goals. Achieving those goals is made easier with the Zach Stahl scores, a unique set of guidelines that rate stocks based on popular investing methodologies, namely value, growth, and momentum. The Stahl scores can help you narrow down which stocks are better for your portfolio and which ones can beat the market over the long term. Why investors should pay attention to this value stock. Finding good stocks at good prices and discovering which companies are trading under their true value are what value investors like to focus on. So the value star score takes into account ratios like P/E, PEG, price sales, and price cash flow to highlight the most attractive and discounted stocks. Lithia Motors, we got Inc. is one of the leading automotive retailers of new and used vehicles and related services in the United States. As of December 31st, 2021, the company offered 40 vehicles brands across 278 stores in 22 states within the United States and three Canadian provinces. The core brands offered by Lithia Motors include Chrysler, General Motors, Toyota, Subaru, Honda, Acura, Ford, BMW, Mini, Nissan, and Hyundai. LAD, so as in Lithium Motors, Zax ranked number three stock with a value star score of A. Solid sales growth makes these five stocks worth betting on. Lithia. Leading automotive retailers of new and used vehicles related services in the United States. LAD offers 40 vehicle brands across 278 stores in 22 states within the United States and three Canadian provinces. Lithia Motors. How next gen cloud will create new services. Apple, Amazon, Qualcomm, Dish Networks. Cloud computing infrastructure is expected to play a big role in deploying 5G services. The advent of 5G should mean the rollout of many new technologies we certainly haven't yet imagined, economists said in a recent report. To make them possible, the tech gurus are saying that cloud computing will move from a cloud server far away to equipment on the edge of a neighborhood network. Edge computing should continue to increase the speed of data transmission, but carriers will have to open their wallets to make it happen. Is Zoom stock a buy amid volatility? Focus on what's ahead. The retailer sector has seen a steep sell-off this year, and upcoming first quarter earnings may offer little relief. So, what management team says about the back half of the year could matter more for stock performance. Earnings season has already gotten underway. Hmm. But reports from a number of major retailers aren't due out until mid-May, as these companies often operate on a fiscal year, reflecting the importance of the holiday shopping season. And though the key fourth quarter was a strong one for many stores, worries about inflation and consumer shifting priorities have hit the group hard. Okay, nothing new. Hmm. Emphasis Energy. Mm, no, actually, the transportation stock is a logistics winner. Hmm. Xerox Holding stock is a value pay. Freight transportation company, not ship transportation stock, has been getting crushed with the benchmark indices. As one of the nation's largest diversified freight companies, the business is experiencing strong tailwinds as revenues rose nearly 50% in its fiscal quarter for 2022. Xerox Holdings is strong value pay. Document management solutions and systems provider Xerox Holdings Corporation stock has fallen back towards pandemic lows with surprising disappointment for quarter first fiscal 2022 earnings report. The company was expected to make 0.13% $0.13 per share profits, but ended up posting a per share loss. Missing by the surprise loss was the first in 2 decades, driven by headwinds, including inflation pressure, supply chain disruption, with Omicron-driven factory closing in Asia, and a slow return to the office for clients. Conference call takeaways. Hmm, Okay. Let's get done with what I was reading last time. I was reading PAL Interactive Business Report. Okay, overview. Polygon is the largest interactive fitness platform in the world with a loyal community of over 5.9 million members as of June 30, 2021. We pioneered connected technology enabled fitness and the streaming of immersive instructor led boutique classes to our members. Blah, blah, blah. Corporate Information Board of Directors. Changes in internal control over financing report, material weakness, evaluation of disclosure controls and procedures. On May 24, 2021, the company announced its plans to build a state-of-the-art manufacturing facility in Troy Township, Ohio, leveraging a high-volume, efficient production across our multiple product lines. On July 26, 2021, the company purchased approximately 223 acres of land for approximately $6.2 million. Change controls and procedures, evaluation of disclosure, controls and procedures, management report on internal control or financial reporting. Okay, let's read Check business report. Check $3.1.3 billion enterprise value. Held by insiders, 2%. Held by institutions, 106%. $2,000 people are working here. Consumer defensive. Where is it located? San Jose. Operates direct-to-student learning platform that supports students starting with their academic journey and extending into their careers with products and services to support and help them better understand their academic course materials. Total revenue is increasing. Coastal revenue, gross profit, operating expense, operating income, gross profit, total revenue is increasing. Operating income, operating expense, gross profit. Operating expenses, gross profit, operating expense, total revenue is increasing. Current assets, current liabilities. Income statement. Tax provision. Let's go to balance sheet. Total liabilities, total equity. Check. I wonder how people would view check. Check. Against popular sentiment, here is one metric I'm watching to gauge check's investment value. Three growth stocks down 70% to 76%. You can buy. Subscribers are essential to be sure, but this metric is what attracts customers in the first place. Chag is scheduled to report first quarter 2022 earnings after the markets close on May 2nd. The education technology company, which primarily serves college students, thrived at the pandemic's onset when students were learning remotely. As college began bringing students back on campus, the company struggled to maintain momentum. And interestingly, students taking courses on campus can still benefit from Chag services. Regardless of the short-term business fluctuation, here's one metric I'll be watching when Chag reports first quarter earnings next week. Next week is in okay. First quarter earnings next week. Here's one metric I'll be watching when Chad reports first quarter earnings next week. Checks check to announce first quarter 2022 financial results. Tony Check, the leading student-first connected learning platform, announced that it is scheduled to release its earnings results for the first quarter of 2022, which ended May 31st, 2022 on Monday, May 2nd, 2022. After the market close, Chegg will host a conference call to discuss the first quarter financial results at 1:30 p.m. Pacific Daylight Time on the same day. To access the call, okay. So tomorrow, its business report will come out. Chegg is a treasure trove of content assets. Note that Chegg runs a subscription business. It offers students access to its website and platform for a monthly fee of $15 to $20. As part of subscription, students get to ask 20 questions per month. They're answered by Chegg subject matter experts. Those questions and answers become available for the rest of Chegg's members to view and learn from as well. Over the years, Chegg has accumulated 75 million pieces of proprietary content. This treasure trove of content is the key to Chegg's competitive advantage. Treasure trove of content is the key to Chegg's competitive advantage. It would take years and cost millions of dollars for a competitor to duplicate. For that reason, it is the one crucial metric I'll be following Chegg quarter first earnings report. Moreover, the content has the added benefit of being a low-cost acquisition tool. Students who get stuck in the middle of their studying often go to search engines and type out the concept they are seeking to understand. If Chegg has the content available, it pops up as a result. A few clicks and payment method later, Chegg has a new subscriber, and the student has the help. It reduces the need for an expensive advertising campaign and has undoubtedly helped Chegg grow operating income from a loss of $57 million in 2015 to positive $78 million in 2021. College bringing students back to classroom is a hey one for a company in the near term, but its content is helpful for students, whether they take courses at home or in person. The trouble is that fewer students are registering for college courses, and those who do have signed up for fewer courses. Completing a college degree is challenging under normal circumstances. Adding a potentially deadly virus make it even more difficult. Understandably, many students are taking a step back. Nevertheless, management expects revenue of $200 million to $205 million for the first quarter. While this signals slowing growth, it follows era during the pandemic where revenue surged as much as 63% for 3 quarters. What this could mean for Chegg investors. Analysts on Wall Street expect Chegg to report revenue of $201.20 million and earnings per share of $0.24. If the company meets those projections, it will represent an increase of 1.5%. Okay, this is it for today, and I'll see you guys tomorrow, okay? Bye bye.